Welcome to The Explainer. So today we're tearing into a topic that, usually disguises itself as standard, maybe even slightly boring financial news. But underneath, it's literally rewiring global power as we speak. We're talking about central bank digital currencies, CBDCs, and how they're rapidly becoming the ultimate tool in a totally new era of financial cyber warfare. If you really want to understand the invisible battlefield of the 21st century, well, you're exactly in the right place.
Picture this, June 2025. A major central bank governor stands up at a huge financial forum and drops this incredibly blunt statement. The global dominant currency tends to be instrumentalized or weaponized. Now, he was obviously talking about the US dollar, but the real kicker here, he was officially announcing an alternative. It was a direct, strategic challenge to the dollar's dominance, quietly delivered in the super dry language of monetary policy.
And look, this wasn't just empty talk. Get this. By that point, the digital currency his institution had spent over a decade quietly developing had already processed an absolutely staggering $7.3 trillion in cumulative transactions. I mean, we're talking about deep, baked-in integration across 29 cities, 10 regional neighbors, and 6 Middle Eastern economies. The sheer scale of this rollout is just breathtaking.
All right, let's really dive into this. On the surface, most Western capitals initially shrug this off as just a payment story, right? Just a simple fintech upgrade meant to help with financial inclusion. But the reality? It's a much more fascinating and frankly chilling cyber warfare story. What we're actually watching is a strategic reshaping of the entire global financial architecture and the attack surface this is creating. It has absolutely no precedent in the history of financial conflict.
Chapter 1. Bypassing Dollar Dominance.
Let's peel back the first layer here and look at how this tech fundamentally messes with the geometry of global financial power. Historically, the dominance of the US dollar hasn't just been some fun economic fact, it's a massive tool of state power. Think about traditional cross-border trade. Those transactions have to touch the US dollar correspondent banking system, meaning banks literally rely on US institutions to move the money. That makes them vulnerable, right? Vulnerable to sanctions or getting booted off SWIFT, the global messaging network. But if you settle a transaction in a fully programmable CBDC, like the digital yuan, you bypass Western infrastructure entirely.
Which brings us to a profound structural shift. Sanctions basically become suggestions. For sanctioned states, shifting over to a CBDC system opens up trade flows and revenue streams, like international oil settlements, for example, that Western surveillance simply cannot monitor, let alone interrupt. The coercive power of Western financial statecraft isn't being defeated on a battlefield, it's just being routed around digitally, one system integration at a time.
Chapter 2. The Centralization Paradox.
So this leads us right into a massive vulnerability. The crazy thing is, the exact same system that grants these states so much unmonitored financial muscle also creates an unprecedented risk. You see, traditional correspondent banking is distributed across thousands of nodes, individual banks all over the place. It's highly redundant and incredibly difficult to take down at scale. But a CBDC? By design, it requires centralized national infrastructure. Sure, it gives the state absolute visibility and control, but it creates a single point of catastrophic failure. Every CBDC is basically a high-stakes trade-off between power and resilience. And honestly, right now, nobody has figured out how to preserve both.
The IMF actually nailed this in their 2024 assessment. They broke down exactly why nation-state hackers find these centralized digital currencies so irresistibly attractive. They pointed out 3 compounding risks. First, you've got complex interconnections creating major exploitable vulnerabilities. Second, just the sheer fact that it's a nation's official money makes it a uniquely high-value target. And third, you're bringing in a much wider, way less cyber-aware user base, which totally blows up the human attack surface.
Which leads to a pretty terrifying reality check. A successful state-level cyber attack on a CBDC? It doesn't even need to steal a single cent to be strategically devastating. An attacker literally just needs to introduce a tiny bit of doubt into the transaction ledger. Because if a population can't trust that their digital currency is accurately recording their balances, well, they functionally have no currency anymore. The attack isn't on the money itself. It's on the trust that makes the money work.
Chapter 3. Weaponizing Programmable Money.
To really grasp the gravity of this, we got to look at what's arguably the most crucial feature of these systems, programmable money. We're talking about digital currency coded with precise, unbreakable conditions, constraints on exactly how, where, when, and by whom it can be spent. So the big takeaway here is that it's not just a digital version of a $20 bill, it's money with executable instructions built right into the code.
So what actually happens when you can program money? Well, you get two very distinct applications. On defense, it allows for incredibly precise domestic monetary policy. Think stimulus funds that are hard-coded to only work for domestic purchases, or instantly applying negative interest rates directly to currency holdings. But offensively, man, it acts as a remote-controlled coercion weapon. A state could instantly suspend trade flows, void out credits, and completely revoke payment access for dependent economies with the push of a button. There is literally no conventional analog for this kind of immediate, surgical financial statecraft.
Chapter 4. The Quantum Horizon. All right, let's push the stakes to the absolute limit here. We have to talk about the looming technological nightmare threatening this newly centralized financial architecture. Right now, today, CBDC data is protected by current encryption standards. And yeah, those work totally fine against classical computers. But in the near future, state adversaries are expected to achieve what's called quantum advantage, where quantum computers become powerful enough to just snap those encryptions in half. The consequence of that? We're looking at complete impersonation of participants, total interception of transactions, and quite frankly, a systemic cryptographic collapse.
This is exactly why the World Economic Forum is waving massive red flags, warning that cryptographic agility is required immediately. Central banks desperately need the capacity to rapidly swap out and update encryption standards in the actual architecture they are deploying right now. Because if they don't, a CBDC built on standards that a future adversary can easily break isn't a secure monetary system. It's just a deferred systemic vulnerability, a ticking time bomb waiting to go off.
Conclusion: the unbuilt fortifications.
To wrap this all up with a pretty sobering reality check, the strategic picture we're looking at is crystal clear. First, this whole transition to digital money is, at its absolute core, a competition over which states' global financial coercion capabilities survive and which don't. Second, these cross-border interoperability arrangements, they're being built way faster than the essential security standards needed to actually protect them. And third, the attack surface we are creating, one that could literally paralyze entire national payment networks, is entirely unprecedented in the history of finance.
Which leaves us staring at one massive lingering question. This race for digital money is creating highly vulnerable infrastructure way faster than security can keep up. So if the fortifications haven't been built and the adversary is already inside the perimeter, what happens when the first financial cyber war actually begins? It's a profound shift in global security, and it's going to impact how every single one of us interacts with money. Understanding the architecture is just step one. Thanks so much for joining me on this explainer, and remember to keep questioning the invisible systems being built all around us.